So I'm going to take over the screen here, partner.
Sounds good.
And I have a teachable moment I want to share with everyone today. So I'm making myself the presenter. Here we go. So how are all my warriors doing? Hope everyone had a good Fed day. I know that we, if you were here before the Fed, Blake definitely gave you some very good advice. He was looking to fade dollar weakness. We had that little pop in the euro and it failed. And hello, Craig. And, he's bullish USD CAD prior and was in and out. And CAD also exploded yesterday after the Fed. So very interesting day. But, I'd like to go back all the way back to Monday, okay, because, we could talk about, yeah, this was a great trade. It was 150 pips, or this one didn't work out, but I got stopped out BE. But this is something that you guys could put in your trader's toolkit for the rest of your trading career. So you may want to get out a pen or pencil, because if you're like me, by tomorrow you'll forget what I'm talking about here. I was talking on Monday about the Russell having this major breakout here. And in fact, Steve Olge had when we were trading in here, had a fib target of 172.80. So Steve was way off. Yeah, it went to 73.39, off 10 pips or 10 ticks. Anyway, it never really closed above it. Okay. It was a great call for a top. Although knowing Steve, I don't think he sold it up there because he probably wanted confirmation. So here's a lesson. Let me coach you. When a market has a major breakout, which you have to say after all this consolidation, that this day right here was a major breakout. Okay, so it acted like it should in a breakout and started to accelerate. And maybe it was okay for it to come back and test it once and then go again. But the next time you see a major breakout like this, and it gives you multiple days or even weeks and multiple opportunities to trade the breakout, and I was shown this Monday, become skeptical and also have an open mind. And Blake talks about this all the time, that some of your, best trades are failed breakouts. So here, this was a breakout, and yesterday we had a failed breakout. So at the minimum, if you didn't want to short it, you should have been skeptical about getting long. Mr. Market's job is to shake out as many people as possible. He's not going to make it that convenient if you miss this day. Maybe he'll give you one chance to see if it was real, but not 2, 3, 4, 5, 6, 7 chances to get in. So the next time you see a major breakout and the market doesn't accelerate to the upside or downside after the failure or breakout, and you could allow it one retest, but if it does this again, give me a why if you know what to do next time a major breakout turns into just a distribution pattern, or a major failure turns into an accumulation pattern. Give me why if you get that lesson, and you won't be trapped like the rest of the pigeons anymore. Okay? Good, Tom. David. All right, beautiful. All right. So, I just want to bring this up because we're nearing the end of this. It's over the 30th, so what do you have? Thursday, Friday. I think till Saturday. You won't see these prices for another 11 months or so. This is our best promo of the year. You won't see any kind of promo until next year. And, when you think about it, say you pay, one of the levels you get on, say you pay $120 a month. Okay. So let's see, if it wasn't a website and you could just pick up the phone or text Blake, would you pay him $12 a month to pick his brain? How about Grega? Is Grega worth $12? FX seems to think so. Keeps winning awards there. How about Stelios? who traded more size than most people anywhere, that are in here for a bank, and remains humble with excellent macro work. Or how about Steve, one of the better traders I've ever seen? Is he worth 12 a month? All right, Steve, I'll give you 6. And this guy, you know, coach, tries to teach you every day. It's free, but we're able to be free because we have a sponsor and we have a very nice subscriber base. So to keep face going too, you know, community supports each other. You know, if you are always trying to get something for free and never reciprocate, you're not sowing good seeds. You know, you have to plant seeds, not only reap the harvest, but plant. Joe's going to be on Bloomberg today. So, you know, let's give him Steve $6 and pay Joe 18 for the great national visibility he gives our company. All right. So I think we're getting pretty close. Paulie, you just heard Paulie. I mean, every day he has numbers. He missed the top of the buns. He could have been long buns yesterday looking for his resistance, and it came within 3 pips of it. Amanda's a very excellent trader who's in our chat room every day. Andre, you know, I've seen he caught Euro Pound last week. I haven't looked at what the active pattern and plays are right now, but excellent harmonic work by Andre. So if you really think about it that way, you're really not just paying for ForexAnalytix. Okay, you're getting all the hard work and passion. And, you know, we're not out here trying to just get you to trade. If you notice, on our pattern and plays, they're usually 3 to 1. And you have all the advantages of being in the chat room with the guys after the free webinar is over. And you have the advantage, push an alert for me. Wherever you are, you could be on vacation and you're going to know what everyone that I just showed you is thinking in any one of the instruments that we cover. Here's a dashboard. So I call this a traffic light page. Okay, you won't run red lights. Okay, you don't want to run red lights. You'll look for confluence between the different types of methodologies that we have, and you have just a few days to act. So click the link now, and let's get back to the markets. I want to thank all our subscribers for being part of our trading family. I think it's the best team on the net, and this is the best webinar on the net, free or paid. Go out and look for something for 100, 200 a month, and tell me if you get this type of feedback every day. So that's your Russell right there. Remember at the beginning of the week, I had a little bit of a different view on yields. I was looking for a high in the 10-year. Didn't quite get up to where I thought it could get up to. I thought maybe 16, and it got to, I think, 310. Yeah, 310. So, you know, we didn't even take out this high. That was a pretty negative day. I'm not saying that we can't make another run. You know, we have a 1, we have a 2, maybe we'll have a 3, but you know, I would say after this, here's the weekly. You know, we're on the verge of a reversal week to the downside. So we'll see. We'll need a little more risk off for yields to come back down, but this tied into the end coming off a little bit as well. So after this, just want to cover, like I was talking about yesterday, silver had a better pattern than gold, and there was a decent scalp. I showed this 1430 area here, so it was good for 12. Still hold it. In fact, I have a guest that got long. Our guest today, Dylan from Simple Trends, is with us, and he had something with the Bowley band that got him long in here. So we'll get an update on the precious metals from Dylan and some currency updates. Okay, all you crypto fans, no crypto today. Okay, so go back to your crypts if you're unhappy about that. How you doing, Blake? Are you with me?
Hey, good morning, Dale. Sorry.
Hey, buddy.
chat, and hold on, I'm just in the middle.
I know, you ignored my whole soliloquy about you giving people the great advice about, fading dollar weakness yesterday, and your bullishness in Canada, and you're spot on.
Hey, I actually just closed out my dollar Canadian at 130.60 about an hour and a half ago when I got up. 4-hour RSI is getting a little overbought, and I was hoping to buy a dip, but I don't know. It's at that point where you don't want to buy it here. I definitely don't want to be short. I just want to buy dips. The question is,
let me ask you something. Did you have your best day of the week yesterday? I'm just curious.
I did.
Okay, you know what, Blake? I did too. It's a shame that we don't have more red days, because I love them. You get all these reactions and stop hunts and everything, but it seems to me my best trading days are reacting to the reaction of red events.
Yeah, well, when the market is
grind,
when the market's in the state that it is, which is just a grind higher, the explosive days are going to be the reversals, and so it's the exact opposite. When I mean, you can remember 9 years ago. I mean, we were 9 years ago. We were down every single day. Yeah, I mean, the easiest trade was market gapped up 100 points, you short it. And then by the end of the day, we were down 30 points. Market gapped up 30 points or 100 points, you short it. The market's down 50 points by the end of the day. And you just shorted it every day. It was the exact same price action, but opposite 10 years ago. Yeah. For a good 2 years. And, then, we had, years of choppiness. We had probably a good 4 or 5 years of, extreme bullishness, extreme bearishness, and then for the last, I want to say 5 years, it's just been nonstop grinding higher almost. And so when you get in these grinding sensations in the market where it's just like, stop, for crying out loud.
Yeah, Groundhog Day, huh?
Yeah, it's like the best money, or the quickest money to be made, is when you get a sharp reversal like we saw yesterday. And
right, inflection points.
Yeah, you hit these inflection points and then we reverse, and those are good. And what I did yesterday really had nothing to do with the FOMC. Well, it did. I guess you could say that. That the dollar CAD, for example, was holding up very well.
Yeah, why don't you take over the charts, buddy, so people could look at a real technician's charts.
Gosh, I don't know about that, but I'll tell you, the dollar Canadian was holding up really well, and that was due to all the NAFTA news. I mean, I have to hand it to the guys over at the Gellos office. We have been bearish the dollar Canadian since last week, and I picked up a really large position last Friday, and I've been playing it kind of long getting out, and then yesterday ahead of the Fed, I picked it up a little earlier. We were trading down here at this 129.50 or whatever, and I had a relatively small position, and then once we busted through this resistance at 129.70, I just stepped up size. So and you can see it was a pretty clean move. And then this move right here happened in Asian trade last night. There's it's nonstop talk about NAFTA being basically, it's not going to be NAFTA. I mean, it's going to be, we've been talking about these issues for the last couple of weeks, but it's Canada versus the U.S., and I think Canada is going to continue to try to hold out, and we're going to miss the 30th September deadline for the NAFTA agreement, and we're probably going to get unilateral deal with Mexico. So if you're watching the dollar MEX and you wonder why the dollar MEX is going the opposite direction, and you can see the dollar Mexican peso is going one direction, you got the dollar Canadian going the other, it's because Canada is going to realistically be excluded, at least initially, from this deal. So so anyway, the dollar Canadian has been a great move higher. Now I actually expect to move up, you know, past 131. I'm looking for 131. I've been looking for 131, 130.96, which is a 618 retracement. Although I'm not long anymore. I got a little concerned with this 4-hour RSI, as extended as it was, and we were knocking our head up against resistance. But I don't want to short it. I only want to buy dips. I'm not chasing, so I have nothing to do at this point. You know, when you're in a situation like this where you go, okay, well, it's too bullish to be shorted, but it's, you know, it's gone too far to be chased. So I'm not going to be long now. I don't think the right trade is chasing the dollar Canadian. Although I do think it's eventually going up here. You know, I eventually think we're going here. But I'm hoping we see this first, then here. You know what I mean? And give some opportunity to reestablish a long position on a dip. I just don't know if that's even possible with the dollar Canadian. So now I'm just kind of sidelined, especially now that I've pulled everything off the table 10 pips ago. It's like, okay, well, I can't, you know, because once you reestablish a position, then you're trading the P&L of that position rather than, well, I do. It's hard for me to go. I'll just give you like a number example. Like, oh, I booked $20,000 in profits this morning. Great. So I have a hard time mentally, like me personally, reestablishing a position, watching a position move against me $2,000, $3,000, $4,000, and in my head I don't think, oh, I'm still up 16 grand. In my head I think I'm down $3,000 or $4,000. So I have a hard time doing that personally. So for me, it's like, you know, every new position is like I start from ground zero, or, you know, zero. And so like whatever I booked overnight or booked in a position, it is irrelevant at this point in time for me. I have to start. I trade the trade versus trading my P&L. I don't know if that made any sense to you, but that's the way that I think. And some people don't think that way. Some people can think, you know, oh, I'm up 20 grand for the day, so I've got $20,000 I can trade. I can lose 10 grand today and still be okay. I have a hard time reconciling that in my head. So every trade that I take is a new trade, and it's a new P&L for that particular trade. Hopefully that makes sense to you guys that are listening in. Anyway, so the question is, what do you do now? And I want to point out a couple of things. I'm actually going to do a blog with some of the other ForexAnalytix members today, so be on the lookout for that. I'm going to talk the S&P. I'm going to talk about bonds. I'm going to talk about yields. I'm going to talk about the dollar yen. So I'm not going to go into great length because we've got data coming out in 10 minutes. I'm not going into great length about what I'm going to talk about, but let's talk about the dollar yen for right now, because the dollar yen is bouncing after we took out this upward sloping trend line. But take a look at this big long-term channel we're in. All right, this is a big range as far as I'm concerned. You know, we've got the 110 levels support, 113 levels resistance. I do think the dollar yen is going to come off here, you know, from current prices. So I do think we'll trade back down towards the 112, you know, 50 level today, you know, towards the lows, and probably continue lower from here. We are bouncing though right now. It's always hard to say that when you got, you know, a bounce happening in your face. But I think there's a lot of other factors at work here. But in specifically with the dollar yen, I think you got to be very careful with longs at this point. And I've been pretty, I don't want to say bullish the dollar yen, but constructive the dollar yen up until we peaked yesterday above 113. Now, a lot of you might say, well, Blake, if you're bearish the dollar yen, does that, you know, make you bearish the dollar across the board? And the answer to that question is no. I'm actually quite bullish the dollar everywhere else. So what that in turn makes me is bearish the euro yen, bearish the pound yen, bearish. I know the pound yen's bouncing right now because of some Bank of England comments, but I'm bearish the Aussie yen. You can see the Aussie yen's got a nice double top. I'm bearish the Kiwi yen. The Kiwi yen also has a double triple top actually, and then I'm also bearish the Canadian yen, obviously because the dollar Canadian's bullish. I'm bearish Canadian dollar, so Canadian yen I'm also quite bearish. So and that also leads into, you know, how I feel about the S&P and some of the other markets at this stage in the game. But I think you have to be really careful with these yen pairs. These yen pairs do not look constructive at all. They actually look like they are going to show some, you know, topping patterns here, and I think you have to be really careful with them. I just give you a couple key levels here. Like the Aussie yen, you know, stopped at the 618 retracement here. We also had a double top and we broke down. The New Zealand yen stopped at a major downtrend line yesterday and reversed even after the RBNZ met, kept rates unchanged. There was just a statement, no press conference or anything, but the RBNZ is now open for, you know, they'll cut rates, they'll raise rates, they're open for anything. So whatever. It was but anybody that was buying the New Zealand yen following the RBNZ yesterday has been smacked in the face pretty hard. As you can see, we rallied and we just slumped. Oh no, this was this rally right here. I'm sorry, that was this rally right here yesterday. Wait, no, it was this rally. This is the RBNZ yesterday. So the euro yen also, you know, we have a big confluence here on the euro yen. 618 retracement, 161% extension. This confluence right here, you can, whoops, right there basically, has stopped the euro yen. I think the euro yen's at risk of, you know, breaking back down and moving back towards 131. So and all in all, I want to go over one last thing with you guys before I turn it over to Steve and Stelios here, is the euro dollar. You know, the euro dollar stopped at a big 38% retracement. The market was extremely bullish euro dollars when we were trading up at 118 last week. We have since then shown a reversal, and the euro dollar, I think, is in trouble now. The euro, from a technical perspective, I hope that we get some sort of rally back to 117.50. As Paulie said this morning, 117.30. Yeah, any type of 30 to 50 pip bounce in the euro dollar, I would be very excited to sell into any strength. The question is, are we even going to get it? And you know, I don't necessarily want to start shorting the euro at this moment, but I think the euro looks extremely vulnerable, and we could probably trade back down towards the 116 level pretty easily from where we're currently at. So I don't, even though I don't have any position, I feel that the market was way too bullish up here, and now we are at risk of a longer term breakdown in the euro dollar. Now we do have some pretty important data coming out here in a few minutes. We have final GDP numbers and durable goods orders, some trade data, the goods trade balance number coming out, obviously unemployment claims as well. So we have a few things that are going to be released here in a little bit. So I think you have to be a little careful, you know, with you know, some of these moves that have happened overnight. I think the easy money was made yesterday following the FOMC. I think today is going to be a little trickier. But if the euro dollar, you know, takes out the overnight lows, which is 116, let's call it like 116.85, we take out those lows in the euro dollar, I think there's going to be a lot more pain for euro longs. I think euro longs are, anybody that's long the euro right now, you know, has probably moved their stops up towards the overnight lows. They don't want to see any move below that. So I think a move below the 116.85 level is going to accelerate some losses here for the euro dollar, and I think that's the risk at this moment. Yeah, with that being said, I've got to mention that, guys, today is Thursday, right?
Yeah, buddy.
Today's Thursday. Okay, today is the second to last.
Investing.com Thursday, which makes it a very special Thursday. Everything.
Oh yeah, we have a lot of traders that listen to investing.com, are listening from investing.com, so that's great. We offer basically once a year an offer for ForexAnalytix and our pricing. So it's a buy 1 month get 1 month free, buy 4 months get for the price of 6, or buy 8 months for the price of 12. It's an extreme discount. We only do it excuse me, once a year. If you're not a ForexAnalytix subscriber, make sure you take advantage of this. It's good until until Sunday, so you only have a few days left. And once you download once you start ForexAnalytix, make sure you download the mobile app. Make sure you join us in the chat room. Our chat room is well, I mean, we've got let me take a real quick look. We've got 97 traders. It's exclusive to our community. You can see there's 97 traders in there right now. We talk a lot of markets. We post a lot of charts about what we're looking at. Where the market's going, and a lot of great information. So if you're not in the ForexAnalytix community, make sure you take advantage of it. You got all these great tools at your disposal. So and that pricing is only good for the next couple of days. And plus, Paul Franco, he is going to be doing his European crossover webinar, but it's going to be exclusive to ForexAnalytix subscribers as of Monday. So
Monday.
Yeah, as of Monday. So Steve, I'm going to pass it over to you guys, and make sure that you mention our good morning. Make sure you mention our sponsors. But I got to roll. I got to get ready.
Go ahead, buddy. Can you push someone push an alert so our viewers could see what happens when we see a breach of resistance support or something? They could see it on their screen, actually even hear the sound, which, always gets my attention, like Pavlov's dog.
Let's see, we have durable goods, and
this comes to your phone or any other device, also your iPad, anything. So, you don't have to be stuck at home and in front of your platform. You could go anywhere. There you go. So you'll be getting these kind of updates. You'll be getting our pattern in plays. You'll be getting things where, we have a new outlook. Go ahead, Steve. Hello.
Right. Durable goods and final. Hey, mate.
Steve, I think your connection is not good, so you have to switch to the other router. We lost you already. Okay, we're gonna take over.
And Estelle, I want to thank you for being a rooter for me. While I was down and missing me. I have a question for you, Estelle. No one's talking about it, and I don't know the date, but all this trade war stuff and everything that's happening here domestically, politically in the U.S. I believe that we have to fund the government. That was pushed, continuing resolutions that happen over and over again. And with things being this contentious, with Kavanaugh and everything else in the midterms, I'm not sure. Do you know when the date is, when the drop dead date is for us to fund the government? And, maybe there's going to be a government shutdown.
I have to check. I don't remember, actually. I have to check. Actually,
me, I'm always looking to talk about something that no one else is bringing up.
Sure.
Important,
actually,
man.
It's a good question. I'm gonna actually go and check. Actually, meanwhile, we just got the data. Core durable goods orders was weaker than expected. GDP came in line. Trade balance so worse than expected. And jobless claims roughly the same. So kind of a
little bit higher initial jobless claims, but it's like a minuscule difference. Price index, GDP price index higher, 3.3%. 3% was expected. Core durable good orders quite a lot lower than expected. So Yeah, nothing very serious comes out of the data.
The dollar is rallying a little bit. The dollar on the back of that.
Yeah, the yen a few pips.
Yeah, and we're seeing the Euro USD, by the way, plunging lower. The USD yen, you can see it on the bottom right of my screen. Oh, sorry, I'm not sharing. My mistake. Okay, you should get my screen now.
Steve, you know what's tempting to me here? I'd like your opinion because it's kind of live.
Here it is, by the way. If you look at the top right of my screen, Dale, you can see the notifications that keep coming now.
Right, I do.
Yeah.
Well, Euro pound down here with what's happening with Euro and everything. We got to about the 78.6 retrace here this morning. Wondering what you think. I think it's worth a shot with stops under the lows now.
My opinion hasn't changed since the other day, which means that, I don't consider it very easy that we're going to completely retrace that day like it never happened. So I'm totally with you. I think that the risk reward would definitely provide a nice opportunity as long as we're staying above this 88.50 zone.
Yeah.
I think we've retraced enough.
Yeah, I think it's 78.6, Steve, near today's low, because 68, so, they've tested every fib level, got a bounce, okay? Monday, the 38, the other day, halfway, and then yesterday, 61.8, you had a nice bounce of 40 pips, and I think today's low is 78.6. I'm eyeballing it.
No, I totally agree with you there. I mean, I think it's a good opportunity from a risk-reward perspective. I mean, you're risking, in essence, what, like 50 pips?
Yeah, to be right for a few hundred if it really goes.
Yes, exactly. If there is at least one more leg higher, I mean, you can easily aim for, the first target, in my opinion, would be roughly 70 pips from where we are. So, already from the first target, it's more than a one-to-one. Risk reward opportunity.
Guys, we have to remember though, today Euro sterling is going down for two reasons. Obviously, the Italian situation is one thing where the budget actually they lean towards a more a less how should I say it, a less cautious approach. So they're going with 2.4% of a deficit, and also we had Haldane, the chief economist of the Bank of England, saying today. Actually, just a little while ago, that's why sterling popped, that the UK growing at the current pace would need more hikes. So this is the chief economist of the Bank of England, and he's actually talking about growth. He's not talking about inflation, which is way above target. He's talking about growth, which if you think about it, GDP growth is the one thing which is kind of lagging. Employment is really good, inflation is really good. Brexit obviously is on a different thing on its own, which brings all the uncertainty, but growth, it's not stellar. It's not UK is growing, but it's not growing at a really fast rate. So he's talking about growth.
No developed economy is really growing at amazing rate.
Hey guys, off the market subject, we have a couple of questions from some attendees today. Joshua wants to know what is the cost per month to be a subscriber, and then John Carter wants to know if I am a member, can I renew and take advantage of the offers when they come up?
Yeah, the answer is yes, you can take advantage of any current pricing. You just have to compare what you have right now compared to what what we offer now, because remember our prices went up a little while ago, so make sure you don't change to a plan which is costing you more.
That is true, and you can always use the help whenever you are on the ForexAnalytix side, either you're registering or whatever. If you see here on the bottom right, there's a little button. This is intercom. You can actually speak directly to to any of the people that are in this in our support team. I think they're all doing a magnificent job. So you can ask anything you want there, and they'll be extremely helpful.
Do we still have a Victoria's Secret model answering the questions that we get, Steve?
Actually, we only get Victoria's Secret models.
By the way, Dale, also our friends Simon and somebody else as well, saying that Trump has actually already agreed to back the.
I saw that.
Thank you for that.
The community. That's the advantage of working with the community. You ask and you receive. So, thank you, guys.
Speaking of which, this is the pricing now as it stands until Monday. So Monday it switches back. So we currently have the offers. You can see here. And if you go to ForexAnalytix anyhow on your own, you're going to see on the top, you have a menu to choose from. The choice before the last one is the pricing. And speaking of that, and then I'm going to go straight to the market analysis, is the reimbursement program. Here we've been working for a long time now with Forex FX. They're an amazing introductory broker. They're extremely helpful. They make sure that their clients do a lot better than what the average client of the competition is doing, because they're giving them sound advice and guiding them to the proper broker depending on your trading style. Now, if you use our page for the reimbursement program, first of all, you can use here the Skype or the email address, or directly, the Skype contact to speak with any of the guys there. And it's completely for free. And if you actually end up using them, you can actually either get cashbacks or participate in our reimbursement program, which is in essence that you can this way discount the price of your subscription to ForexAnalytix. Okay, enough said with that. Let's go back to the markets and have a look. Yesterday, speaking of the community, actually we had a nice comment having to do with the USD Swiss. If you go down to the 4-hour chart, you can see that this looks like a nice inverted head and shoulders formation. So I just wanted to share that. I know that Blake spoke extensively about about his view in the Euro USD. Personally, as long as we remain between, let me show you. Personally, as long as we remain below 118 but above this 116.50 area, I remain neutral, because I also see the possibility that we will be retesting this broken inverted head and shoulders neckline, and then perhaps getting one more leg higher. So as long as we remain above that level and below the 118 level that got us rejected multiple times, I maintain a neutral bias. To be honest, I would even like to see one more leg higher, right? So I don't think the game is lost if you're looking for more upside in the Euro USD, but you really want this area to hold. So until we break down below that, I still maintain my view that we might get another push towards the 119.30 area. Nice confluence of the 50% fib and the 200 DMA. Now, having to do with indices, I know that Blake didn't cover them, but before we go there, I wanted to show two things. One, yesterday we were looking like we would finally see a break higher in the Aussie USD, but as it always happened, and I think we stressed that enough on the conversation we had in yesterday's webinar prior to what the Fed would do, we said that daily closes are always very important, and Aussie proved why that's the case, because Aussie initially responded very positively. We were finally trading above this descending channel. We were testing this horizontal support resistance area at 73.20, 73.30, and then we reversed and closed almost unchanged on the day, leaving behind that very long upper wick, which is definitely a bearish signal. And so far today, we're seeing nice continuation lower. And this is another proof of why you should always respect, first of all, daily candles. Second of all, why you should respect the trend, because one more occasion we got rejected. The trend is still holding. As long as this channel is holding, Aussie USD is going to be short. Now, if and when we break above the 73.30 area, I believe that we're going to see perhaps even a fast extension towards 75 cents. So the fact that above 73.30, 75 should come rather fast doesn't change. But what changes after this rejection is that it doesn't seem that we're going to go, we're going to break above 73.30 all that soon. So keep looking lower as long as that's the case. Now, on the other hand, I need to remind you that Aussie Kiwi is toying around with, already trading below this ascending channel. On the other hand, very, very close to this key horizontal support area at 1,085. The 200 daily moving average is also there. In my opinion, a daily close below there more or less guarantees that we're going to see more weakness in the Aussie in comparison to the Kiwi, which means that you should expect the Aussie to underperform the Kiwi for a period of time to follow, and that's important for whatever trades you want to choose. And let me show what I consider to be, I was showing it in the chat room earlier, what I consider to be the key chart out there at the moment. And this is the USD Chinese Yuan. Why? Because I see that this triangle, we had already showed this triangle before, but I think that the triangle looks rather mature at the moment. And I'm expecting that any day we might actually get this breaking out, and I would definitely expect, given the prior move, that we would see this break to the upside. If that's the case, I would definitely expect a new high, and most probably would also expect the 700 figure to be broken to the upside. So now, do I believe? Let me kill Twitter, Skype here. Sorry, so we don't get the message. Okay. So do I believe that we're actually going to take out the previous high? Yeah, I actually do believe it, and perhaps perhaps that's when we might get a big big correction lower after trapping people, getting them long at probably the worst possible point. Now, if you see, the reason I've also highlighted the RSI here is because, in my opinion, this is a very typical behavior of what you expect to see in an uptrend. First of all, we got an initial RSI high, which was like extreme, considering this is a daily chart. It was like something at around 90. Then we started seeing divergence. So, the next RSI high was like at 77, 78. The next one was just barely above 70. And now, after consolidating for a period, we're seeing what you expect to see, which is a period that, the RSI is more or less oscillating, around 50, 60. And, I think this creates a nice base to push higher again. So use the Chinese Yuan. I think we might be getting closer to seeing another leg to the upside. And, as we've seen, in the very recent past, that can also end up moving quite a lot the rest of the markets, including stocks. So, I consider that important to show. Now, on the other hand, if we have a fast look at other exotic currencies, USD Turkish lira, as it seems we might not have a triangle here, we might get like an ABC. So, we might get like a little bit lower prices before seeing another leg higher. USD ZAR, quite a nice rejection from that confluence of resistances there. So far, the move lower looks good. We're now retesting previous low here. There's even the possibility that we might form some kind of a head and shoulders formation, but too soon to tell. Okay, for the time being, I'm considering this to be a corrective move, although it's obvious that the African rand is, is doing much better than other of the commodity currencies. Let's have a look at the ruble as well. As you see, the DXY just broke resistance. So ruble broke above the triangle. That was one last thrust towards the 50% fib, retracing even further now. I think the next downside target is roughly at 60.30. That's at least the level I'm watching. And, a fast look at the metals. Gold, after spending a lot of time consolidating, it seems to be extending lower today. I'm not really sure that's done, because I'm still not looking at this as you know, it's definitely not bullish. I mean, we spent so much time consolidating here, but I still feel like something is missing. So I'm not giving up yet to the possibility of one more push higher before we actually see, you know, a resumption lower, because anyhow, I was looking for a corrective move higher here towards 1238. So, you know, obviously, depends on how we close today, especially if we close below this previous intraday low at 1187 that we're testing now. That's not going to be a good sign. And, you know, silver looks even worse if you ask me, simply because, you know, just look at this price action. First of all, it kept moving lower for a period of time after gold stopped doing so. And, you know, the recent rebound is just a very, very weak, like you can call it as a bear flag. And, you know, this half a day breach above the 1430, 1440 resistance area was, you know, so short-lived that, you know, I don't even think that anybody got really trapped being long here. I mean, giving the recent weakness. Now, copper is moving lower, but you have to consider here that first of all, the manner in which we rebounded is quite impressive, and I would consider that this 273 area might act as support again. So my initial thesis that a break above 273 will get us up to 294, I think is still valid. I would be looking for copper to find support anywhere, you know, between here and 273, and perhaps produce one more leg higher. So that hasn't changed. And what hasn't changed as well is the fact that palladium is by far the most bullish of all of them. I mean, you know, I'm just hoping and looking for opportunities, you know, to buy it lower, but it just doesn't, you know, do it. I mean, it just doesn't pull back. Of course, at some point it will. And buying up here, I mean, RSI is already daily. RSI went from oversold to 83, so not only overbought, but like a lot overbought. And you know, I'm just being patient and hoping that we're going to get a pullback towards 1027, sorry, 1027, perhaps even 1000. Now that we've actually crossed above this previous high at 1058, I mean, at the very least, I would expect that area to be tested, although I doubt that's going to be enough of a pullback unless we manage to go a lot higher before we finally pull back, which I don't know. It doesn't look that likely. I mean, we're extremely overbought, but you never know. So, Stella, do we have any questions?
Let me have a look. We have somebody asking for Euro Aussie. You haven't covered that, have you?
Oh, yeah. It's a good idea. Actually, I'm going to cover all of the Euro and Pound crosses. I had in mind to do it, actually. The reason being that we now have more clarity. For example, I have a decent reason to believe that this move lower in the Euro Aussie is corrective. The reason is, first of all, we started, correcting after a very strong move higher, and the more days that pass, the more this looks like that it's going to end up being either a triangle or a bull flag. So I would expect that at least one more leg higher remains before this move is done. So I don't have any reason to believe that we're done. I mean, it might take several more days for this move to take its final form and the structure to be completely revealed. But so far, I'm seeing enough price action to believe that the chances are that this is a corrective move. More or less the same applies to Euro Kiwi. As you see, Euro Kiwi came back, almost retested this broken trend line resistance as support. This trend line has already proved its value because the pair tested this same trend line multiple times as resistance. Every single time it failed. So, it is of importance. There's no question about it. So I expect that, we might see something equivalent. Now, having to do with EuroCAD, because I'm also going to have a look at EuroCAD, and then we're going to switch to the equivalent pound crosses. This looks to me like a corrective move lower, on the other hand, we're failing to cross above the 61.8 again. So, two things I have to say here. First of all, for me to turn more bullish, I need to see a daily close above the 61.8 at 153.30. But once we do that, this move lower is going to look quite corrective to me. So I would expect that there's going to be more upside. Okay. So this was, 61.8 on our way down. Now we're backtesting it to be exact, okay? Because I didn't mention it. So this looks like a pennant to me, which we might have already broken to the upside. I just want to see a daily close above there to have more conviction about that. So EuroCAD definitely doesn't look as bullish as the Euros and the EuroQ. I mean, if you think about it, those were testing, highs, and EuroCAD was still moving lower. So obviously, if you want to be long one of those, EuroCAD should not be your preferred choice, right? Because it was underperforming. Let's have a look now at the pound Aussie, pound Kiwi, and pound CAD. Pound Aussie, as you see, obviously less bullish than the euro. This obviously has to do with the fact that the pound kept underperforming the euro. More or less a consolidation. The important thing here that keeps the bullish dream alive is the fact that we backtested this breakout level at 179.30.40, and that held. So I have to say that it looks less bullish than Euro Aussie, but definitely as long as we hold this 179.35 area, I have no reason to advocate that somebody should actually be short the pair. Okay. Now, on the other hand, if for some reason you want to be short, we're now testing like a soft support resistance area. So, this is the area you should be doing it. Personally, I wouldn't be doing it, but, keep that in mind that we're currently testing an area that can actually provide resistance. Now, having to do with the pound Kiwi was very, very clean from a technical perspective. It took a long time to actually finally break above this symmetrical triangle. You can see the two red trend lines that constitute resistance and support. We broke above it. We pushed towards 61.8 of a larger move lower. I can zoom out so you can see it. There it is. And then we actually started selling off quite hard. And I said, listen, if we actually break below the triangle again, this breakout higher will end up being one of the biggest bull traps that we've had in FX this year. But I need to see the pair actually make it back in the triangle. So I'm convinced that this is a bull trap. So far, we rebounded very nicely from the triangle's resistance. This time acted as support. So as long as we remain above it, perhaps this is a textbook case of breakout, retest, resume, right? So we have to be a little bit patient and see how this is going to work out. But there is no question about it. This trend line is of paramount importance to the trend. Okay, as long as we stay above it, you can remain bullish. But if we break down below it, as I said, this looks like a huge bull trap, and I would expect that there is going to be more weakness to follow. Stelio, any more questions?
We have a couple. Actually, I've been out a little bit, so I don't know all of the stuff you've covered. Dollar Swiss, we're being asked. Did you talk about
yeah,
Swiss?
we covered this.
Okay, hold on.
Potential, let me recap on that. Potential of an inverted head and shoulders formation, but 0.9750, extremely critical. Only once we clear above 0.9750, I will be more comfortable looking to the upside. Okay, so that's the key level for the trend, 0.9750. What else tell you?
Okay, hold on. Actually, we have one question from our friend Majid, who's saying, can you please let me know the benefits of registering to the community compared to listening to daily morning program? The difference is basically that this is a 1 hour webinar, 1.5 hour free webinar, but registering and, getting a subscription to ForexAnalytix, you get 24 hour, when the markets are open, obviously. 24-hour coverage of a lot more stuff.
You get access to the chat room that we post a lot of stuff there that you can see. You get the patterns in play, which is our interpretation of the markets and trade setups. You get daily analysis and intraday analysis on 30 instruments. So actually there is no comparison. On one, you just get some viewpoints that, of course, we're always, giving you our best view, but our view might change intraday because something happened or whatever. And we're giving you a rough view of the market, but on the ForexAnalytix platform, you get to see what we think and what we update and what a lot of other traders and really competent traders are doing like all day long. So actually, one is just a fraction of what we offer.
Okay. Yeah, the face is just a taste for us to get you hooked on ForexAnalytix. We only give you a little bit here, but you get the rest when you're a subscriber. Right, guys?
Exactly.
Yeah. Steve, two more things maybe before we go to the guest. Okay. So we have 2 or 3 friends actually asking us for the Nifty and the Rupee. And then we have somebody asking for a specific stock, if you want to have a look at that.
Sure, if we have the time. Let's go fast with that. So, Rupee, consolidation. So far, this doesn't look bearish yet. So this looks like a consolidation. Obviously, there is clear upside momentum loss. Obviously, I wouldn't be buying the USD against the Indian Rupee up here, although I do believe there might be more upside, but as I said, clear momentum loss for now. Okay, but on the other hand, it's not bearish yet. I don't see some.
So with a momentum loss, you wouldn't be short, but you wouldn't be long. So it's kind of neutral when you're there. You're not ready to get short because you don't have price action, and it feels a little bit late to get long up here.
Exactly. I mean, the easy part of the move is probably done already. Okay. And now having to do with the Nifty, my high conviction was that after the break of that triangle, we would see follow through towards at least, this is exactly what I had drawn, towards at least a 127% extension of this corrective move lower. We actually got more than that. We got almost to the 161.8. We're now seeing a move lower once again. Now, the question is, does this look impulsive to me? Not yet. But on the other hand, do I think that it's going to reverse from here and go directly higher? Also not yet, because this, the problem with corrective moves is that you don't know exactly how they're going to play out. So perhaps, we're about to finish the first leg of a move lower, then we might see a recovery, then we might see another move lower. I can tell you one thing for sure. Important zones of support, and, I would also need to draw a fib, but let me do that. Important areas of support are definitely, one of them is this one at 10,600. So I would be closely watching for that one. And let's draw a fib here and see. Oh, and as you see, this more or less coincides with the 61.8. So 10,600, quite an important area, but also the area at which we found support is also a confluence of supports, as you see, because it's a 50% fib. Also, if you see, this is more or less within the triangle where we found a couple of times resistance. Okay, so let me get 1 minute off the way. So there it is. So this is another area of support that we're monitoring. So perhaps a little rebound from here, a little bit more of a consolidation. This might also end up being a triangle, right? So you might get price action going like this, right? But so far, I have no reason to believe that, okay, that's an all-time high or whatever else, and now doom and gloom is coming and, the index is going to collapse from there. So far, I think this looks like a healthy corrective move lower. And Stelio, what was the last one you said, a specific stock?
Okay, Dylan. Looking forward to meeting you. Thank you, Steve, Stell, Blake, Face Warriors. I'd like to introduce you to Dylan Shepard of Simple Trends. Waiting to hear your voice, Dylan. How are you? See your screen. Nice call on silver the other day.
Hey Dale, how you doing?
Good. Great to meet you, Dylan. Thanks so much for taking some time out today to address our community. And nice silver trade the other day for that pop. So,
What's that?
Nice silver trade. You were looking for a pop. You got a nice pop towards 1440. I saw it on Twitter. You said it had recaptured a mid-bully band, and you guys were long looking for the pop, and that's before it really came out and headed up towards that 1440-50 level.
Yeah, well, it was a
Nice
decent
call.
start.
Yeah. So how long have you been at this, Dylan?
I've been trading not too long, honestly, Dale.
Well,
5 years.
okay. You know that
I started kind of messing around with markets and trading.
You know, that's kind of like, are you going to show us your screen so we could look at some charts and some of the things that you do and teach? There is
Absolutely,
a screen
if
share.
I can figure out how.
There's a drop-down menu. There you go. I have your charts up now. I have silver up. So, okay. So, 5 years, Dylan, is the average answer I get. I've interviewed quite a few traders, and I ask them, well, how long did it take you to make breakthroughs and become consistent and know that you knew how to do it? I mean, even though all of us, no matter how long we've been doing it, go through drawdown periods. So 5 years you've been at it. Why don't you take us back before that? What were you doing before you started messing around, and who brought you into the industry? What was the catalyst for you to become a trader?
Well, I was in college at the time, probably junior, and my dad had always managed his own portfolio, so I was always kind of around it, and that's how I got interested. Had a small amount of cash to sort of mess around with, which obviously, as you know how it goes, that went pretty quick. I lost that all.
Okay.
There's always a learning curve.
What was your biggest lesson from that losing money on your first go around?
Maybe don't. So what I did, I don't know if you remember.
Don't trade live for maybe 6 months or so, or reduce leverage dramatically until you know what you're doing.
Definitely
How about that one?
Leverage.
Okay.
Small size. Be patient. Only trade the perfect setups. Don't trade every little thing you're looking at.
Right.
You get wrapped up in the excitement of trading, and you want to be doing something all the time, or else you feel like you're not trading.
Great point. So a lot of it's in your head.
Absolutely.
Not in the charts, in your head.
Yeah, exactly. And I'm not as you'll notice, you probably already noticed, I'm not really a strict chart trader. There's a lot of other things that I take into consideration before putting out a trade. So
you pay attention to fundamentals. So why don't we start with silver? And I know the tweet I saw was because it had recaptured like a mid-bully band or something. I'm not sure what the time frame was, but what else is a consideration besides the chart that we're looking at here? It looks like you have bully bands up there, something like that, plus a channel that broke out of. What do you look at fundamentally in the precious metals market to give you a bias one way or the other?
Well, so here's just going back to what you were talking about with the recent call. So here's silver, obviously a downward channel there, which had failed to break out several times, and finally did, and it also happened to line up with that mid-Bollinger Band.
Okay.
And as you can see, it also has been rejecting that every single time. So
Okay.
see that reclaim. Now it's kind of fighting with it again, going the wrong way, but it's still trying to hold above. And for me, taking into account sentiment and positioning, this is still very constructive. As long as, you know, we bottom somewhere around here. I don't want to see it much lower.
So what do you use to gauge sentiment in silver?
So sort of how my process works, you've probably seen, I used to post my weekend reviews on Twitter. Now I'm posting them to our website, and I'll just kind of post little snippets. But my starting point is always looking at COT reports.
Okay. So are you looking to be on the same side of the commercials, or and fade the small spec?
I don't really watch small spec too much. I'm watching large spec. If this chart will load. Here's silver.
Okay. Okay.
So yeah, the basics of this, for those out there listening who don't know, commercials in general is the smart money. When you have extreme positioning, you want to be on the commercial side. You don't want to be on large spec. Large spec is here in the green, and they are short silver right now. And we'll zoom this out a little bit. Here's a 5-year chart. As you can see, large spec has never been more short in the last 5 years.
Yeah, and the red is the commercials, and they've never been the closest to flat I've seen them on your chart in many years, right? You know what's funny about silver, Dylan? I just tried it. You know how you could hashtag things, and you just put the number sign up and type a word, and on Twitter it'll come up. Try and hashtag silver. There's no hashtag for it, or at least one that doesn't pop up. So definitely you have an underloved commodity here.
Yeah.
And
absolutely.
So I think the COT is more constructive silver than gold, because a lot of people were pointing towards the extremes in gold as well over the last few months while it's been getting crushed.
Actually, gold is kind of caught up to silver in that aspect. So here's this is going back to 1994.
Okay.
And we're at a record here in silver positioning. I know everybody, especially yesterday after FOMC, there was so much panic that gold and silver did not go up after the meeting. Well, fact is they raised rates and they didn't come out dovish, they were hawkish. The real win was the fact that they didn't go down. They finally stopped going down. So here's silver going back 20 years. They're at a record.
Okay.
We'll go back to gold. So
COT is like a big thing. Have you ever noticed that the commercials have pretty deep pockets because they could be early by 6 months? While we don't have the same type of staying power that they do, because really they're hedging.
And that's the key is if you're using COT reports to base your trades off of to some extent, you want to be patient. You want to wait for very extreme setups, and that's why, like I said earlier, for beginning traders, you don't want to trade just every little setup you see that might work out. You want to trade the best setups. In this case, you want to trade the most extreme positioning. So here's gold.
Okay, so let me ask you this. I think it's impossible for people to have that mindset if they're, trading off 60-minute charts, maybe even 4-hour charts. So for people to have that kind of mindset to look for the kind of trades you're talking about, you really need the patience of Job, because maybe you only get, 4 or 5 kind of setups like that in a year. Sometimes it's, this has been developing in silver for years. So how if you wait for these types of setups, how many do you see pop up in front of your face in a year like this?
Like this, not too many this extreme.
Okay, that's what I mean. Okay,
Yeah.
so
this is a rare opportunity, and this is so there's a couple reasons. My time frame has really lengthened here. I was already kind of a longer term trader. Average holding time probably a month. That's going up here lately, just due to all the noise in the markets, everything going on. It's just crazy, different breaking news every minute. It seems like.
Do you do anything in FX, Dylan? You do anything in FX?
I don't trade FX. I do analyze FX.
So do you think that there's, if you're a silver bull, are you going to be correlating that you think we need a weaker dollar for silver to begin in advance, or can it rally with the dollar being either like neutral or even bullish?
It can rally with the dollar. That's not my view right now. My view is at the top, and the dollar is in for some time.
Okay. Okay.
I think we topped out right there, and let me expand.
At 97, right?
So we got to a point. I was bullish the dollar down here, and that was just due to extreme positioning, and we've rallied off those lows. And large spec has been pretty quick to attack this move and get long with it.
All right, let me ask you on the silver. To me, it looks like there's a decent chance of new lows coming. Gold retraced 50% today. Maybe it'll go 61.8. What would be your next level that you would be looking to probe silver if we made a new low?
If we made a new low in silver?
Yeah.
I would be looking to add really anywhere under this previous low if we get some good positive D.
Okay.
I don't think it's going too much.
You're talking divergence, D, right?
Right.
Okay. What tool do you use to measure divergence? RSI, stochastics, MACD?
Yeah, mostly RSI. We had some positive D here on these two lows. To go make a lower low, we may just even strengthen the case there.
I renamed RSI.
What's that?
I renamed RSI.
What'd you call it?
Real Simple Implicator.
Is that? Do you use RSI?
Yeah, I use RSI.
Yeah.
I missed her RSI. Oh, no. I'm Mr. 3 Drive. I don't know what I am. I'm just coach. But, okay, Dylan, so why don't you tell us what your business model is, in case some of the viewers that are with us now want to, get in touch with you and possibly work. Do you teach? Do you run a trading room? Do you have a signal service? What do you do? Your website is guruhavenslack.com.
Yeah.
Yeah, all I got was a sign up when I went there.
Yeah, so you this is not the permanent version of the website. They are working on. I'm not working on developing it so much. I don't know if you follow Kobzi on Twitter, but he is the one who came to me with this idea, and he wanted me to be a part of it. So we have as you can see down here, I have an alert section, I have a chat. And this is my research this is where I now post my weekend reviews.
Okay.
Very in depth. And here's a little bit about, I covered the post FOMC, the way the market took that meeting yesterday.
Okay. So I see you called yesterday's action in US dollar yen pretty bearish. With it rallying back over 1303, what would be your take on the yen now after, it's almost retraced the whole decline yesterday?
Well, honestly, I haven't.
I don't know. I don't know is a good is a valid answer. Yeah.
But as of now, I'm looking at this as a double top in the dollar yen.
Okay.
And I'm expecting this to come down to this 108 area.
Okay.
On a shorter term time frame.
Where would you begin to step into a trade? Would you sell it on the way up or wait for some type of negative price action?
I like to sell on the way up. I like to scale into a position.
Okay.
I'm not one that looks for a breakdown. You know, I'm not a momentum trader.
Okay.
I like to sell on the way up, buy on the way down, and build, if I can, a large position. If the market allows me to. All
right. Well, I'd really like to, anything you want to wrap it up with that you wanted to share with our audience today, Dylan?
So I'll just go over my process real quick.
Okay.
If I can. I do the same thing every weekend. Just about. It doesn't really deviate. I like to be consistent, and I'm all about structure and my process and repeating that over and over. So I always start my reviews, and that's the most important part of my process. So I base my trading off throughout the whole week. I start with COT reports, and I start with the dollar, analyze currencies. Then I come to bonds, and then I come to commodities, and then I do a little bit of stocks. I don't trade stocks too much. I mostly focus on commodities, but I like to analyze everything and give myself a good macro picture. I find a lot of times that if you listen, the market will tell you a story. And as like it yesterday, post FOMC. So here's what I found yesterday, and this is our website. I'll just give you a little peek of what I was doing last night. So obviously, Fed raised rates. They sounded pretty hawkish to me. The dollar really had a pretty muted reaction. Pretty volatile. All in all, didn't really go anywhere. So what I have on the dollar right now is this looked like a fake breakout to me, and this is very bearish. And now we're testing this midpoint in the pitchfork.
Okay.
Dollar's kind of wait and see, but my bias is for much lower. Looking for 92 here pretty quick, and then I think we're going back into the mid to high 80s.
All right, that's interesting, and so we're probably, it's a timely bit of analysis too, because if it is going to turn bad, we're getting close to where it should, right, buddy?
Right, and this is a clear head and shoulders pattern, and what I like about this is nobody's talking about it.
Yeah.
When you have a head and shoulders pattern, normally everybody wants to talk about it. And
you're right.
They're quick to jump on that train, whichever way it's going.
Yeah.
But nobody's watching.
Don't get on the long black train. It's
What's
a great
that?
song by Josh Turner. Play that song, Long Black Train by Josh Turner.
That's
get
a
on
good
that
song.
train.
I'm with you on that one.
You like it? All right. So, I want to thank you for being here today.
Yeah, thanks for having me.
Yeah, like it or not, you're my trading warrior brother. I wish you and all the people that you work with, the pips rain down on you, buddy. And
thank you. Same to you.
I appreciate that. And why don't we keep in touch, and some very nice looks and ideas, Dylan. So again, I want to thank you for sharing your journey, some of your methods, and some views you have in the market. Thank you, buddy.
Yeah, thank you. And hopefully when these plays turn gold and silver, I have a longer term view on these. And,
okay.
I've been very clear on Twitter.
All right.
I think they're going.
Well, I'm never against having great guests like you return. So we'll do it again. It's a promise.
Absolutely.
Okay. Thank you very much, Dylan. Everyone, you could follow Dylan on Twitter at @simple_trends. and keep an eye on silver and the dollar and gold, and let's see how things play out in the days ahead. I want to thank all our viewers from investing.com and our regular warriors here, and I'll see everybody tomorrow to wrap it up for TGIF. Remember, most of all, even if you're having a great day, don't just count your pips, count your blessings. See everyone tomorrow. Adios. Thanks again. Thanks again,
Dale.
Dylan. All right.